Officially, Dow Jones and Nasdaq have entered into the correction. Dow Jones has lost 10.5% and Nasdaq has lost 11.5%. However, S&P 500 yet to enter into the correction because the fall was approx 9% only. But because the Dow Jones and Nasdaq have entered into the correction, this means that very soon S&P 500 is also going to enter into the correction. And exactly you can see here in this article of the Wall Street Journal that the Dow Jones has entered into the correction. So what we are expecting in the correction in the S&P 500, we are expecting somewhere from 17% to 22%, means from 5,800 to 5,500 range. And if the situation does not improve and the recession strikes, then we are expecting anywhere from 40% to 60%, means from 4,200 to 2,800. And if you think that these targets are unrealistic, then you can do your own research and look into the historical data, and then you will see that these numbers are very much realistic. Because now the S&P 500, the Dow Jones and the Nasdaq are in the staircase pattern and are in the bearish cycle. But this bearish cycle is for correction only and not for the recession. However, the chances of recession have now increased heavily to around 70%. And what exactly will trigger the recession, what numbers, levels will trigger the recession, that I will discuss in the recession segment of this S&P 500 technical analysis. Now let me tell you that what has actually triggered this heavy fall and pushed the indices like Dow Jones and Nasdaq into the correction. This was Wednesday 25th of March. What happened on this day? The S&P 500 moved up but failed to sustain above the 6600 psychological mark and closed below the 6600 psychological mark and in a pattern that was already bearish. This is why if you notice that in the final update on that day, Wednesday, I have mentioned this to my members that if the S&P 500 closes below 6600, then it's a heavy bearish condition and indicates a rejection and the technical bearish condition. And if at the same time the Nasdaq closes below 24,236.40, then this condition becomes very strong bearish. And we will be expecting a gap down open on Thursday or irrespective of any open and initial or intraday bearish movement on Thursday. And the S&P 500 entered into the 6,400 range and gave the first daily closing after many months within the 6,400 range. This is why on Thursday it was clear that the bullish side in the S&P 500 will be limited and restricted to the 654x/5x and the bearish side to the 648x. But because there was no saturation on Thursday, that is why we have seen this heavy fall on Friday. This is how the candle formed on Wednesday 25th of March has triggered this heavy fall in all of the indices. So now why I am saying that there will be a bullish retrace, what factors will actually trigger this, the bullish retrace or the heavy bullish retrace, or if first there will be a fall and then the bullish retrace or a similar pattern that we have seen in the previous week. All of that in detail I am going to discuss in this S&P 500 weekly technical analysis, which is for the week of March 30th, means from March 30th, which is Monday, to April 2nd, that will be Thursday. April 3rd is the holiday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in three parts. The first part is the technical part. Here I will show you the technicals on the weekly chart and the daily chart, the absolute saturation in the Dow Jones on the weekly chart, the very heavy saturation in the S&P 500, and then some room in the bearish side through the daily chart. Second part is actually the recession and the correction scenario. So through the data, historical data and the charts, I will show you and I will tell you that what we are expecting to happen in the near term, whether the S&P 500 and the Dow Jones and the Nasdaq will recover from the correction, or if actually it will enter into the recession, and how soon we can expect this to happen. Third part is the probable movement. In the probable movement section, I will tell you that through the numbers, levels, zones, for example, whether we are expecting first the fall, then the recovery, or first the recovery, then the fall, what will be the bullish conditions, what will be the bearish conditions, all of that in detail in this, the probable movement section. So guys, first I'm going to start with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, this is the technical part. In the technical part, I will discuss the weekly chart and the daily chart. First, I will cover the weekly chart. Weekly chart means the long-term picture, the long-term trend, bullish, bearish or so. Okay, means for a month, 3 months or 6 months. Daily chart will be the short-term picture for a week, for 2 days, 3 days or so. So first, I'm going to cover the weekly chart. First comes the candle. Now, if you notice, it's a very heavy bearish candle. Okay, and it's closed near to the low of the candle and also below all of the moving averages. So this candle is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. And also not just on Monday, but for the entire week, the S&P 500 and the market will remain under pressure. Means if there comes any confusion, in that case, there will be a fall because it will then align to the trend or whatever the candle is indicating. Now let's analyze the last weekly candle of the Dow Jones. This is the last weekly candle of the Dow Jones. If you notice, the wick of the candle is more than the body of the candle. Closing of the candle is near to the low of the candle, is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. And also it is not limited to the Monday, but for the entire week. Means if there comes any confusion, then there will be the fall. Means it will align to the trend or whatever the candle is indicating, the pressure will be there. And exactly the same is there in the Nasdaq. There is an exception. This exception is only for Monday. Only for Monday. Why this exception is only for Monday? Because the lower level charts are heavily saturated and are demanding an instant reversal and instant bullish movement. This can be seen something like what we have seen on last Monday. So this I will discuss in the daily chart section and then the probable movement section. Now let's analyze the technical indicators. Okay, technically, yes. So technically, S&P 500 is bearish through the moving averages, bearish through the Bollinger Bands, and is bullish through the Ichimoku cloud. And also the S&P 500 is bearish through the MACD on the weekly chart and is bearish through the stochastic RSI on the weekly chart. As of now, it has hit the initial saturation. What? Initial saturation, and there is no absolute saturation. Secondly, there are 2 consecutive weeks of this the saturation, means the K equal to 0 of the stochastic RSI. This is something that is helping. This is exactly the same thing that has helped last week also. Okay, we have seen whatever we have seen on Monday, Tuesday, Wednesday, okay, was because of the saturation on the weekly chart and then the saturation on the daily chart. Exactly what I'm saying now for the coming week. Okay, so this means that S&P 500 on the weekly chart is bearish, okay, or is heavily bearish, but again the same problem, not problem, but something that is helping. As of now, S&P 500 is 70% bearish on the weekly chart, and what is helping it to sustain? The crossover in the moving averages is still not there. We are waiting for the crossover to happen. Because the moving averages are so close, we need a very heavy bullish candle. Very heavy bullish candle means like you can say from the last closing, we need this entire candle to be covered 4%, more than 4 or 5% bullish movement we need. Means a very heavy candle. Okay, means you can say like anything more than 4%. So 4% bullish movement within 1 week, especially when the situation is not good. So if there comes no good news, then whatever bullish recovery will happen, this bullish recovery will be limited, maximum to 2% to 3% range. This will be the maximum range of bullish recovery. This range is not enough to help the S&P 500 or the moving averages of the S&P 500 to not to give the bearish crossover. Bearish crossover will be there by default. It will be there no matter what. So 70% bearish S&P 500 on the weekly chart. Now comes the most important part here. Okay, this is the Dow Jones. Dow Jones, okay, is the benchmark index of the S&P of the US stock market. Dow Jones has entered into the correction because it has lost around 10.8%, closed at 10.5%. Okay, candle is indicating the fall. Technically, the Dow Jones is bearish through the moving averages and the Bollinger Bands on the weekly chart, but is bullish through the Ichimoku cloud on the weekly chart. And the Dow Jones is bearish through the MACD on the weekly chart and is bearish through the stochastic RSI on the weekly chart. Okay, now the Dow Jones in this manner is 70% bearish on the weekly chart. 70% bearish. Then what is so special in the Dow Jones? Like it is in the correction, it is 70% bearish. Then what is special? Okay, the special thing that you will see here is the MACD. Okay, and the more important is the stochastic RSI. Now there is absolute saturation in the Dow Jones on the weekly chart. Furthermore, divergence is very heavy on the weekly chart of the Dow Jones. This is very similar to what we have seen in the month of April when tariffs were announced, like 100%, 150% tariffs. There was very heavy fall. Okay, this kind of situation was there. However, what was not there at that time is, if you notice, okay, let me show you here. At that time there was no absolute saturation. Okay, in last more than I think 14-15 years we have not seen. This was something that was seen last in the 2008, in the year 2008 when there was the recession. That time we have seen this kind of condition. Okay, otherwise in last 14-15 years, 17 years, since 2008 to here, in 17-18 years we have not seen this kind of condition. This means that that now there is no doubt, okay, that this correction, okay, there is very heavy chances that this correction will convert into the recession, because we are seeing a condition that we have not seen in last 16-17 years. However, exactly the same condition helps the Dow Jones, helps the S&P 500, helps the entire US stock market to retrace and to trade bullish. Why? Because of the absolute saturation. By April 2nd, Thursday, because April 3rd, Friday is the holiday, Good Friday. Okay, April 2nd, Thursday, we can see a closing above 45,166.65. Okay, there is only one exception to this condition. Only one exception that will disallow this to happen. That I will discuss in the next part, in the recession segment section. Okay, so a recession part. Now let's get more information and the more confirmation on the fall, saturation or so through the daily chart. So guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now let's first analyze the daily candle of the S&P 500. First of all, open equal to high condition. Secondly, closing was almost near to the low of the candle, indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, so this is through the daily candle of the daily candle of the S&P 500. Now this is the Dow Jones, exactly the same. The last candle, open equal to high condition, and again the closing is also very near to the low of the candle, indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, now the technicals are very surprising here in both of these cases, S&P 500 and the Dow Jones. And again, what is the reason why the technicals are surprising? But guys, before I discuss the technicals, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now, in terms of the technicals, what is surprising is that when the S&P 500 was coming down, when the Dow Jones was actually coming down, then these indices were supposed to hit the saturation in the bearish side and to trigger a good or a heavy bullish retrace. Means a short squeeze was supposed to be there. Okay, but what happened on Monday? Because of the comment from the president, moved up, then moved up. These three candles on Monday, Tuesday and Wednesday, opened more room in the bearish side. And the most important day was the Wednesday. Again, the Wednesday was the day that has confirmed and triggered this fall. Why? Because S&P 500 closed in a heavy bearish condition, and also the Nasdaq supported that a heavily bearish condition. That is why a gap down open on Thursday, or irrespective of anything, an initial or intraday bearish movement on Thursday, and also the 6,400 range on Thursday in the S&P 500 was expected. Anyways, this will be more clear through the technicals. In terms of the technicals, the S&P 500 is bearish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the daily chart. S&P 500 is bearish through the MACD on the daily chart, and is also bearish through the stochastic RSI on the daily chart. Problem is the saturation. If you notice, stochastic RSI is not hitting any kind of saturation. Okay, there is not even initial saturation in the S&P 500. Okay, so in this manner, the S&P 500 is 100% absolute bearish, but is at the initial level of saturation. Initial level of, sorry, not saturation. This is actually through the divergence. This is through the divergence. If you notice, this is through the divergence. There is divergence. Otherwise, everything is fit and fine, and S&P 500 has more than enough room to fall, continue its fall without creating any problem, without creating any saturation. Okay, now let's analyze the chart of the Dow Jones. Well, Dow Jones is almost exactly the same. Dow Jones is also bearish through the moving averages, through the Ichimoku cloud and the Bollinger Bands on the daily chart, and the Dow Jones is also bearish through the MACD. And yesterday only the stochastic RSI of the Dow Jones turned bearish on the daily chart. Okay, the same divergence is there. Okay, divergence will allow some recovery in the S&P 500 and in the Dow Jones. Okay, and the same goes to the Nasdaq. But for now, the Dow Jones is 100% bearish. Okay, but it means absolute bearish. However, there is more than enough room in the bearish side, because there is no saturation on the daily chart this is the daily chart of the S&P 500 and the Dow Jones. Again, the same problem. This problem was created by these three candles. These three candles formed the lower highs. Okay, there were two opportunities to go bearish, Monday and Wednesday. So the indices gave us these two opportunities. This means that Monday, although the weekly chart is indicating an immediate reversal and instant reversal, but the daily chart are indicating delay. The daily chart are saying more delay in the market, means more delay in the recovery. Okay, and also indicating that if at first there comes the recovery in the stock market, in that case, what will happen? In that case, again the same pattern, we will see more fall and S&P 500 moving towards 6,100. Why the 6,100? Well, this I will discuss in the next section, in the correction and the recession part. Through the numbers and the data, I will show you why the 6,100. And guys, before I discuss the recession, correction, levels, numbers, everything, let me tell you that this is my S&P 500 knowledge transfer program. Through this, the knowledge transfer program, I will teach you each and everything that I know, from the basics to the very advanced levels. This includes the technical indicators, modified parameters, trading strategies with very high accuracy, market analysis, options trading and options trading strategies, support and resistance levels, price prediction, how to predict the price, trend analysis, how to analyze the trend, and the premium hacks with very high accuracy. And guys, whenever you want to participate in this program, then this is my email address, and these are basic terms and conditions. And in order to participate, you can simply send me an email. I have also given the link to this Google spreadsheet in the description of the video and also in the comment section. And guys, other than that, if you want to learn the specific topics, then this is my Patreon page, and this is my Patreon profile. And here you will see this section, shop section. And when you open the shop section, and in the shop section, you will see these the 3 products, 8 hacks plus modified technical indicators, 4 stock market hacks with unmatched accuracy, and the options trading premium calculator and the options trading strategies, everything about options. So these products cover the very specific topics, and I have given the link to the shop section in the description of the video and also in the comment section. Now, let me give you a clear idea through the numbers and the data. Okay, the recession, what will trigger the recession from the correction? Okay, and what will happen when the US stock market, S&P 500, Dow Jones, and the global stock market enters into the recession. Okay, and how long the correction cycle will take, and then the recession cycle. So the very first thing is the indices themselves, the S&P 500, Dow Jones and the Nasdaq. Okay. Well, when the Dow Jones or the S&P 500 is already in the correction, means the Dow Jones is in the correction, so there is no need to discuss the Nasdaq separately. Okay. So in the previous section, in the weekly chart section, I have shown you that the specific condition K equal to D equal to 0 is something that is very rare on the weekly charts, and we are seeing it after 16-17 years, after the year 2008. This means something is really bad in the stock market, right? Technically, this condition is there. Secondly, if in the next week, if the recovery is less than 4%, if the recovery is less than 4%, in that case, there will be a confirmed bearish crossover in the moving averages. So the same is seen in the S&P 500. However, the K equal to D equal to 0, the absolute saturation in the S&P 500 is still not there. But on Monday, not just on Monday, because this is the weekly chart. So whether this happens on Monday, Tuesday, Wednesday or Thursday by 2nd of April. Okay. If S&P 500 trades below 6368.86, that was the closing on Friday on 23rd of March. If S&P 500 trades below, sustains below and closes below. Okay. Well, forget about the closing for now. But any movement below, and means a bearish movement below 6368.86 means K equal to D equal to 0, there is absolute saturation in the S&P 500. Now this absolute saturation will then be in the S&P 500 and in the Dow Jones, and is a very extremely rare condition on the weekly chart. Okay, this means situation is really bad, and that was the reason why the Dow Jones has entered into the correction. Now what next from here? Okay, well, through the technicals there will be the recovery, but that's a different thing. Okay, what we need to understand here is the oil. This is the oil. Okay, USD BRO, US dollar Brent crude oil. Now if you notice here, the closing of the oil, Brent oil, on Friday was 109.66. Okay, the heavy fall that you are seeing, intra-week heavy fall, this was based on the comments from the president. Comments from the president that the war is expected to be over soon. Because of that, we have seen a fall. Okay, intraday fall, recovery, and intraday bullish movement in the stock market, then the fall. Okay, so counter movement we have seen. But now here the most important part is the closing of the oil. And if you notice, for last 3 weeks, week of 9th of March, week of 16th of March, week of 23rd of March, continuously for 3 weeks, the oil is holding, sustaining and closing above the $100 mark. Okay, number one thing, in the previous S&P 500 weekly technical analysis and the last weekly technical analysis, I mentioned that if the oil holds and sustains above $100 per barrel, okay, in that case correction is most likely, highly likely to happen. Now the correction is already there. Okay, full correction cycle is yet to be realized. Okay, but at least the indices have entered into the correction. Okay, but the most important part is in the last 2 weeks, for the week of 16th of March and the week of 23rd of March. In last 2 weeks, we have seen that almost every day, the oil closed above on the daily basis, closed above $100 per barrel. Now, this is the monthly chart of the oil. Okay. Back in 2007, it started to move up, and then in 2008, in the month of July 2008, the oil hit the all-time high 147.50. 147.50. Then the next condition was seen in the month of March 2022, and the high was 138.03. Okay, in 2008, this was because of that time the heavy recession, okay, banks failures, okay, that thing. In March 2022, this was because of the Russia-Ukraine war. These are the trend lines. Okay, trend lines. These are for those who do not have much knowledge of the stock market. These are the trend lines. If you notice, and also this is the monthly chart, right? If you notice that trend line, this particular trend line, okay, then what you will notice here, okay, oil moved up in 2022, came down, sustained at the trend line, sustained at the trend line, sustaining, and is moving up. Okay, in the bull side, again there is a trend line. right? Now in the bull side, the oil will not be looking for 138.03. It will be looking for somewhere around 134, approx 134. Okay, means if the oil hits 134, okay, it can hit in a day, in a week, in a month, in 2 months. Whenever it hits 134, this means that the correction cycle is complete, or means indices will complete the correction cycle. Okay, without completing the correction cycle, indices will not retrace back. Means the 2022 will be whatever movement we have seen for the entire year. We have seen the fall in 2022. The same fall will be there, at least will be there. And now most likely the recession is into the picture. Why? Because of this condition. Now earlier we were expecting that there will be some relief to the global stock market and the oil and the energy market, because the war was mostly concentrated in the Strait, or to the Strait of Hormuz. Okay, so the global stock markets were really concerned about the Strait of Hormuz. Okay, now to make the matter worse, the Red Sea route, okay, means the Suez Canal. The Suez Canal route. Okay, so there was the news that now there is some possibility that this route may also be blocked, because the Houthis in the Yemen, they have also participated in the Middle East war. Okay, this was something that the Wall Street and the stock market, they have not considered, and they have not priced in, because they were thinking that for now the situation, everything is concentrated to the Strait of Hormuz. Okay, this situation, Red Sea and the Suez Canal, is not there in the picture. But now the Wall Street and the global stock market and the energy market will have to consider this particular thing. The very heavy impact of this, the Red Sea, particularly Suez, okay, this will be felt on the Europe. Once there comes a confirmation that this is happening, then European market will enter into the recession before the US stock market can enter into the recession. And it's been only just 1 month of the war, and what we are seeing, its global impact, like in US, $3 per gallon. Okay, the gasoline, it was before 28th of February. Now it is $4 per gallon and is expected to hit $5 per gallon. Now, because the fuel price is increasing, that increase in the fuel price is increasing the inflation. Okay, and now comes the Feds, right? This is for the 9th of December 2026, the FOMC meeting. Okay, as of now we are in the month of March, and this is for 9th of December 2026. 72.4% is the probability, the current rate, the Fed's fund rate, it is 350 to 375 BPS. Okay, now you can see 72.4% probability that there will be the current rate. There will be the probability, there is 22.2% probability that there will be 25 BPS rate hike. There is 2.3% probability that there will be 50 BPS rate hike. Okay, now why it matters? Because earlier, before 28th of February, this probability of 72.4%, this was less than 1%. Less than 1% means market was not expecting, the Wall Street was expecting that 100%, 200%, for sure, certainly there will be a rate cut, but that is not there. So from like 0.1% to 0.2%, okay, we are seeing 72.4% probability that Fed's fund rate in the December 2026, 9 months from now, will remain same. This is what they are expecting. Furthermore, there was 0% probability for 25 BPS rate hike and 50 BPS rate hike. So now I have shown you the chart of the S&P 500, Dow Jones, oil, okay, and the interest rates, the expected interest rates, okay, up to December 2026. This is the data. This is no speculation. This is no made up theory, no made up thing. Now, what will happen to the S&P 500 and the Dow Jones when the recession actually strikes? So for that, what we know here is the correction cycle and the recession cycle. This is through the weekly chart. Okay, it will be very easy and very clear to show you and to help you understand. So in this update on Friday to all of my members, okay, the correction cycle, what we are looking for, 17% to 22% fall. Okay, 5,800 to 5,500. Recession cycle, we are looking for 40% to 60% fall. This was back in 2008, right? This is the S&P 500. Back in 2008, from the all-time high, we have seen a fall and 58% fall. This was a recession, 58% fall in the S&P 500. Okay. Now the numbers that I have given you, 40 to 60% fall. Okay. So again, this is realistic. This is no made up story, nothing. Okay. This is no speculation, but this is based on the historical data. This is why the correction number that I am saying, okay, correction from the all-time high, 17%. What is 17%? 17% is 5,800. Okay, you can see this side at the right hand side. Okay, 17% is 5,800 to 22%, 22 or so, 5,400. Okay, so this is the correction cycle, right? Now the recession cycle. Well, recession cycle, I need to okay, perfectly fine. The recession cycle means anywhere from 40%. This is the all-time high. From the all-time high, we are talking about the 40% here. Okay, 4,200 and to 60% maximum. And it cannot be more than that. Means like 62%, 63%, but not more than that. Because when it moves beyond 50%, then heavy buying. Okay, then it starts. The heavy buying starts. So 2,800, 60%. Okay, means 2020 levels, right? Now, as per the technical movement, what we know is that whenever there comes a fall, okay, then whatever is the high of the recent cycle, okay, it is the market, the S&P 500 or the Dow Jones, whatever it is, or the index, it always hits the highs. Okay, in this case, this is the early high from the all-time here is 12.2%. The next high here is 31%. This is the high of the 52%. 12%, 32% and the 52%. But guys, before that, let me tell you that no matter what is happening, whether there is a correction or the recession or the bullish cycle or the bearish cycle, whatever will happen or whatever is going to happen, I will keep you posted. I will keep you updated every day through these daily precise updates which I give to my Patreon community members on the daily basis, Monday to Friday, Monday, Tuesday, Wednesday, Thursday, Friday. I give the pre-market analysis before the open of the stock market. Then I give the first update after 1 hour. Then I give the midday update after 3 hours. Then I give the final update 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of on the daily basis what is happening, what is going to happen. And guys, that's not all, because I also give the opportunities in the premium stocks, 30 to 50 opportunities in the premium stocks of the US stock market in the top 30-40 companies. And that's not all, because I also give the midweek update, and it's a video technical analysis generally given every Wednesday and in detail along with the precise numbers, levels. So guys, whenever you want to join my Patreon community in order to get these daily precise updates every day from Monday through Friday, then I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see these 3 levels, level 1, level 2 and level 3. Level 1 is S&P 500 updates. In this level, you will be getting the daily updates and the all midweek update videos. And the level 2 is S&P 500 updates and opportunities. In this level, you will be getting daily updates every day from Monday through Friday, as well as the midweek update videos and the premium opportunities 30 to 50. Level 3 is the premium level, and this is S&P 500 updates, opportunities, hacks, etc. Here you will get all midweek update videos, daily S&P 500 updates, movement and the premium opportunities 30 to 50. And also through a Zoom video meeting, I will teach you the hacks, strategies, technical indicators with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years. And they are getting these daily precise updates and the opportunities and the midweek update video technical analysis and they are very well aware of what is happening and what is going to happen next. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I'm going to discuss the next part, the third part of the agenda, that is the probable movement. Okay. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the next week, coming week. The week of March 30th means from March 30th, which is Monday, to April 2nd, that will be Thursday. Once again, Friday is the holiday, Good Friday. Now, situation, okay, on the technical part, okay, the weekly chart and the daily chart, okay, I've shown you the heavy saturation on the weekly chart, but the daily chart are still allowing more fall. More fall means at least 2 consecutive 2 days of fall, Monday and Tuesday, perfectly allowed without any problem at all. Okay. Now, other than that, the data. Well, next week, only Wednesday, the retail sales data will be released. Okay, and if you notice in the previous section, the correction and the recession section, I have shown you the interest rate expectations that now the Wall Street or the stock market, these hedge funds, the investors, big ones, then even the manipulators, okay, they are not expecting a rate cut, rather they are expecting either a pause or even a rate hike. Okay, now whatever, once again, whatever this the bullishness we are seeing here, okay, in the year 2024, then here in 2025, and then in the year 2026, this was based on the assumption that there will not be any more rate hike, okay, and there will be rate cuts. Now, in the previous section, correction recession section, I have shown you what the market participants are expecting. First of all, they are not expecting any rate cut. Rather, they are expecting a rate hike. This means that whatever gains were there based on this assumption, this speculation, okay, all of these gains will be lost. That is why we are seeing the correction cycle. Now, so this means that Wednesday, the retail sales data will be released. Wednesday, the retail sales data in the morning. Okay, situation is already bad. If the retail sales data that does not support any bullishness, in that case, we will see more fall. Friday, the non-farm payroll and the unemployment data will be released. But because Friday is the holiday, okay, this means that first of all, this data may not be released. But even if the data is released on Friday, that its impact will be felt in the next week. Okay, that will be the week of April 6th. Okay, on April 6th, its impact will be felt, right? Other than this, there is nothing else that is going to help the market. In terms of the technicals, what we know is that lower level charts, hourly charts, 2 hourly charts, 4 hourly charts, lower level charts are heavily saturated. Okay, means the bearish side saturation. There is very heavy saturation through the lower level charts. What does that mean? This means that an immediate recovery is required. Now, what recovery and for how long? Because we are talking about the lower level charts, hourly charts, 2 hourly charts or so. This means at least 2 to 3 consecutive, successive hourly closings, bullish closings. Okay, this means if there comes a gap up open on Monday, okay, I'm not confirming that there will be a gap up open. I'm simply telling you a scenario. If there comes a gap up open on Monday, okay, it remains bullish, okay, or even if it try to come down a little but does not breach the low of the candle, sorry, the closing of the candle, then also that will be the first candle that will help the S&P 500 to come out of the saturation through the lower level charts. Then there comes a second candle, third candle. Okay, in this manner, in the first half, the entire first half until at least 12:30 p.m. or maximum by 1:30 p.m. Okay, S&P 500, Dow Jones, these are indices, will be and must be in the recovery mode. Why? To cool down the technicals on the lower level charts. On the lower level charts, the fall and the saturation is so heavy that we are seeing this after 2022. Okay, see, on the weekly chart, we are seeing the K equal to D equal to 0 condition after 16-17 years, 2008. Okay, but this the lower level charts like hourly charts. Okay, we are seeing this condition after 2022, after 4 years. Okay, February, March 2022, that was there, but now after 4 years we are seeing here. Okay, this is the condition. This means that without recovering, without any recovery, the fall is not sustainable, the bearish side movement is not sustainable. On Friday, the S&P 500 came down more than expected. We were expecting it to sustain at the 6400 638x, and then to give at least a limited recovery in the 6400 range to the 642x or 641x level. But it moved up a little and then failed to, means the green candle was not there. There was the intraday recovery to the 644x, it failed. Okay, means the green candle was missing. That was the problem. Furthermore, it formed a sandwich pattern. Because of the sandwich pattern, more fall we were expecting in the last 2 or 3 hours. Okay, this means that as of now, the bearish side movement is not sustainable. This is the bearish side movement. Means continuous hourly candles are fall. For example, yes, in this case, one more case, if there comes a gap down open, right, then will it be sustainable? No, not at all. Why? Because of the charts, the lower level charts that are heavily saturated. Even if the gap down open, it will have to move up. Okay, initial recovery will be there. We need at least 2 to 3 green hourly candles. Means the entire first half on Monday, on March 30th, Monday. Okay, it should give green candles recovery on this. If this does not happen, then we will expect a short squeeze. Okay, why? Because if in the first 2, 3, 4 hours it comes down, well, that is actually technically that is not possible. Okay, but still if it comes down, okay, gives just one very small green candle, but so that does not fulfill the criteria, this thing. Okay, if it comes down, means this is heavily pressing. There is a heavy pressing, heavy. Okay, this will then trigger the short squeeze. Why the short squeeze will be triggered? For that, we need to understand that the Dow Jones is trading in the absolute saturation, K equal to D equal to 0 after 16-17 years. Any more fall in the S&P 500 means K equal to D equal to 0 in the S&P 500 again after 16-17 years. Okay, absolute saturation in both of the indices. Okay, again at the same time, extremely rare condition, but is happening after that, after those many years. Okay, so the market, the S&P 500, Dow Jones and the indices are already very much pressed. Okay, means it's like a spring. It's like a spring. You cannot press this spring beyond its limit. That is why if you press, then it will hold. Then it will have to hold, right? And then there will be a recovery. If this recovery happens and there is a normal recovery, perfectly fine, not a problem. But if there comes more fall, then we shall be ready for the short squeeze. Short squeeze means within a day, it can recover like 2%. 2% easily, okay, it can recover, because then very heavy buying will be there. Now, through my levels and through my other calculations, okay, there are 3 recovery zones for the S&P 500. Okay. For now, I'm going to cover the first recovery zone. I'm going to tell you the first recovery zone. Okay. Second recovery zone comes in the 6,100 range. Okay. And this is not what I mentioned in the previous section, that the all-time high 6147. No. This recovery zone is different. This recovery zone is different. Okay. And third one is, well, this is in the 5,000 range. Okay. First recovery zone is where? It is right. It is exactly here. It is right here, the first recovery zone. Right. This means that my calculated recovery zone is there. Lower level charts are heavily saturated. The weekly charts are absolute saturated. This means that we are pressing the spring beyond its levels. So we cannot press it anymore, and there must come a recovery. Okay. The question is that if this recovery happens, then to what level the recovery will be allowed? Okay. In the S&P 500, as per my calculations, recovery of 1.2, 1.3%. A minimum recovery must be there. Okay, then only this condition will be fulfilled. If there comes 1.3% recovery from the previous the fall, then the entire 6400, what was the high of the candle? 6453.89. Okay, then this will be recovered. Now there comes a problem again, the same problem, this problem, that this can actually limit the recovery. Okay, this can actually limit the recovery, means for now whatever recovery will be there, S&P 500 will hesitate to breach the open price of this candle, that was 6453.89. okay, exactly there's the same is there in the Dow Jones. It will hesitate to breach the price 45904.25. okay, now this means that hourly recovery can happen, perfectly fine. 1.2 1.3% recovery, perfectly fine, not a problem. The recovery that I'm saying, my calculated recovery, okay, recovery zone that is there, this recovery zone is not entitled for an hour or for this the daily chart. The recovery is allowed on the weekly chart, what I'm saying. Okay, means what my technical calculations are saying, means S&P 500 will have to recover, it has to recover. It can recover on Monday, Tuesday, Wednesday, means any day from March 30th to April 2nd. It can recover any day. This is as per my calculations. Okay, but through the technicals, there must come a recovery on Monday. Okay, and also through the weekly chart, there must come a recovery on Monday. This means that because of the heavy pressure and because of this condition that the S&P 500 will struggle to clear the open price and the Dow Jones will struggle to clear the open price, intraday recovery, hourly recovery can happen, means first hour bullish candle, second hour bullish candle. Okay, if there comes two good heavy green candles, then this can also cool down the technicals, the hourly technicals and the 4 hourly technicals, lower level charts. Okay, if there comes 3 green candles, perfectly fine, means now the lower level charts are good, saturation is not there. Okay, now there is the green candle, this is the green movement. But once the lower level charts, once the lower level technicals cool down, okay, what will happen then? If the S&P 500 does not breach the 6453.89 and the Dow Jones does not breach the 45904.25, in that case, either on Monday itself or on Tuesday, there will be more fall. Why there will be more fall? Because for the recovery to happen, these numbers 6453.89 in the S&P 500 and 65904.25 in the Dow Jones must be breached. This is the only thing that is allowed here in the bearish side. Okay, now this will come down. For how long this will come down? This can come down until and unless there comes saturation on the daily chart. What kind of saturation? At least K hits 0. Okay, on the S&P 5, in case of the S&P 500 and on the Dow Jones. One more thing we must understand, continuous movement or any movement below 6368.86 in the S&P 500 triggers K equal to D equal to 0, absolute saturation on the weekly chart. Okay, once if after the lower level technicals cool down, it comes down, S&P 500 comes down, trades red, Dow Jones trades red. This means that there is very heavy selling. Okay, and now earlier we used to use the term like bullish trap. This time it will be bear trap. Okay, because again the concept of spring, you cannot push the spring beyond its elasticity level. Okay, this means whatever fall we are seeing here, this is trigger or this is going to trigger absolute saturation on the weekly chart and initial saturation on the daily chart. Means now it doesn't matter what is happening in the world. Okay, whether there is war, more war, or if the Suez Canal is blocked, doesn't matter what is happening. There is no more scope for the fall. This means our recovery is must. This must happen. There is a compulsion that this recovery must happen, irrespective of what is happening in the world. What happens if the open price is breached? Means the S&P 500 breaches the 6453.89. Okay, the high of this candle formed on 27th of March. In that case, what we will see? We will see exactly what we have seen earlier on Monday 23rd of March, then on Tuesday, not Tuesday, but Monday 23rd of March and 25th of March. It will move up and will create a lower high. And why I am saying lower high? Because on Monday, what happened? S&P 500 moved up, breached the 6,600 psychological mark and the 661x level, very heavy level. Okay, because S&P 500 breached and then failed and came down, and it was confirmed that it is the lower high. Why? Because at first S&P 500 was not supposed to hold and sustain above the 6,601x heavy resistance level. This is why a recovery will be seen as a lower high. Yes guys, one more thing that I forgot to mention here, that if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community for the daily precise updates of the S&P 500, Dow Jones, then I have given the link in the description of the video and also in the comment section. Well, now when the S&P 500 breaches the 645389, I'm not saying that it must sustain close above. I'm simply saying a breach, and the Dow Jones breaches the 45904.25, the high of this, the previous candle. In that case, this will open more room. More room means what? More room, does the more room means that it will enter into the 6,500 and will sustain within the 6,500? No, not exactly. Okay, this S&P 500 will enter into the 6,400, 100% it will be there. Okay, it can even try for the 6,500 psychological mark, but before the 6,500 there is a very heavy level at the 648x. Okay, and even if it try to move into the 6,500, then the 651x is already there to trigger this the fall. Okay, so a movement, a bullish movement, when this is breached, the high is breached, okay, is allowed, is permitted, but not heavily, okay, rather normally. Because what happens is that see, a short squeeze will be considered. First of all, let me show you the calculation here. If the S&P 500 moves up from this the last closing and breaches the recent high of that is 4%, okay, the high formed on Wednesday. So a short squeeze condition will trigger when it breaches this the high of formed on Wednesday. Means 4.2% bullish movement must be there. Considering the numbers, levels and everything as of now, more than 4% movement means what? The bearish crossover in the moving averages on the weekly chart will not happen. Not in the S&P 500, but also this will not happen in the Dow Jones. Okay, means there will be the fall. Okay. But if this happens, as of now, no conditions are supporting this much of the bullish movement. Okay, not short squeeze. Why I'm saying that the short squeeze cannot happen? This cannot happen because the other factors are not supporting the short squeeze. Other factors are supporting a limited bullish retrace, so that a lower high can be formed. A lower high can be formed. Okay, only for the formation of the lower high, that's it. This means a technical recovery in the 6,400 range only is allowed and not more than that. Okay, in the 6,400 range there is a heavy resistance zone. Okay, and I have mentioned that the resistance zone again and again. So, and also the level. Okay, and one more thing, the obligation to these levels and the zones is not fulfilled. This means a recovery will happen, and the obligation will be fulfilled. Okay, once the obligation is fulfilled, it will form a lower high and then there will be the fall. Okay, so as of now, the re-entry to the 6,500 is not expected. Okay, there must be very specific, very special conditions for the 6,500 to happen. Okay, and even if it enters into the 6,500, then 651x is already there that can trigger this the heavy fall, and again will push it into this the bearish side. And 46,100 range in the Dow Jones means approx 1.8% recovery. So this fits perfectly into the equation. 1.8%, 1.7% recovery. It fits perfectly into the equation, okay, and allows more fall. Now, The only problem is the bullish side, the bearish side saturation through the weekly chart. The recovery can happen, not a problem. The recovery must happen. This is what the technicals are indicating. On Monday, the recovery must happen in the first half in order to cool down the technicals on the lower level charts. This is what we know. Secondly, because of the weekly chart, okay, now a green weekly candle is required and it is demanded, a green weekly candle, right? If the geopolitical situation does not improve, and if the Red Sea or the Suez Canal comes into the picture, in that case we'll have to wait for one more week. Because why I'm saying one more week? See, there are 4 days in the coming week. April 3rd is the holiday. In the 4 days, okay, even if there comes 1 day of recovery, 2 day of recovery, okay, 1.7% is recovered, 1.2%, 1.3% is recovered, then that is also more than sufficient, and it fulfills all of this, the unfulfilled conditions, obligations and everything, okay. And if this comes into the picture, then after 1 day, just one green candle will create more than enough room in the bearish side. Okay, this means that S&P 500 can hit the 6,100 range as early as the next week if the situation does not improve. Okay, the only problem here hitting the 6,100 is, or anything below 6368.86 level, is the absolute saturation. But because we are seeing these conditions after 16-17 years, 2008, this means that this can happen. There are chances that this can happen. This means that the scenarios now, in terms of the clear levels and the numbers, the bullish, bearish and the neutral. Okay, bullish side is allowed up to the 6,500, maximum up to the 6,500. Otherwise, it should remain within the 6,400 and should create an opportunity of the lower high, just like it did earlier. Okay, moving into the 6,400 means it will fulfill all of the obligation pending in the 6,400. Okay, any fall below 6368.86 triggers absolute saturation K equal to D equal to 0. Okay, on the weekly chart of the S&P 500, and this will be the second consecutive movement thus on this absolute saturation in case of the Dow Jones. Okay, now in the bearish side, it can enter into the 6,100 range. Okay, and this, however, continuous fall is not allowed, and it cannot happen. There is one more thing. Okay, this is very rare condition. I think we have seen in the February 2022 or March 2022, the day when Russia attacked Ukraine, we have seen a very heavy gap down open, like 2 or 2.5% gap down open. Okay, if such a condition is seen on Monday, then what will happen? Then within the first half, it will recover, and it will recover heavily, right? It may take 1 hour, 2 hours, okay, but within the first hour, it will be in a condition to recover. Why it will have to recover? Again, because of the lower level technicals, which are heavily saturated, okay, beyond levels, means beyond their expected permitted levels, right? But if there comes 1 or 2 green candles, more fall is allowed, but the maximum fall, the second recovery zone comes into the 6,100 range. Okay, first recovery zone, I've told you that it is here, right here. It is here, the recovery zone, first recovery zone. Second recovery zone comes into the 6,100 range. Okay, one more condition. If the S&P 500 does not stop here, okay, and it falls heavily, like 2%, 3%, let's say there comes some news, some bad news, 2-3% fall, it enters into the 6,100. Okay, then there will be dual recovery. This recovery will then be very, very heavy, very heavy. Okay, but the recovery from the 6,100 will be up to the 6,400. Okay, not beyond that, right? Because recovering from 6,100 to the 6,400 means it will fulfill the conditions, the recovery zone of 6,100 and the 6,300. Both of these the zones, both of these the conditions. Okay, the same goes to the Dow Jones. So now once the stock market comes into the session on Monday, in the pre-market analysis like this, I will tell you and I will mention what are the conditions for the bullish recovery, how soon it can recover, or whether first it will come down then to recover, and what all levels will be fulfilled, the obligation to the levels, okay, that will be fulfilled in the pre-market analysis before the open of the market. Okay, I will cover all of these, the numbers and the levels. However, guys, if you have not yet joined my Patreon community and want to get these daily precise updates, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.